What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Happy Friday out there. Hope you guys had a good Halloween, good white paper day. That reminds me, we are having a special on the website. If you want to support the independent content, you can get half off your first month on both tiers, member and premium tiers. So check that out, bitcoinandmarkets.com. And while we're talking about it, let's just go over there really quick. Take a look at the website. It's where all my stuff comes out. I do put all these live streams out as podcast, trying to get really fast at it, catch up on a backlog, then get them out like 48 hours after I go live, then get them out on the podcast. You can find that in all the different podcast apps. Also, November price forecast competition came up. So if you are a $5 member on the website, you guys can sign up for this. And you just have a form at the bottom here, and you go in there, put your prediction or your forecast for the end of the monthly candle, when the monthly candle closes. We had a little bit of interesting goings on at the end here of October. So price closed at 70,231 on Bitstamp. Right after that, it dropped down to 69,000. It would have changed the results of this price forecast competition, but it is the candle close on Bitstamp at the end of the month. So that's a little perk. It's kind of fun to do with the community and see what you guys can do. If we have a Hall of Fame too. Let's go that. So we've been doing this back since like 2019, and we have all these winners with multiple wins. DT is the current biggest winner, I guess, that's active in the community, and you get your name on the Hall of Fame here if you get that. So check that out. $5 members get to enter that. Okay, so let's move on to the price charts and see what's going on with Bitcoin, because, man, it just seems like there's so many positive things here happening over the last couple of weeks, and Bitcoin is not pumping. How can that be? So let's take a look at this. So far today, down 1.4%. That's not bad, but it's bad in the context of how bullish we've been with all of the bullish stuff going on. ETF flows. We have Bitcoin options coming any day now. In November, we have Trump and his positive Bitcoin message. Of course, the halving cycle, the 4-year cycle that we all love and track here on Bitcoin. And we failed to break the all-time high by just like $100, really, but have come down since then. So what gives? Well, it looks like we have some degens that are coming into Bitcoin. So let me find that tweet. This really struck me. Okay, just about $1 billion got liquidated in the last hour, and that was this morning at 11:59. Probably more than this even before that, but you can see 700 million in Bitcoin, 250 million in ETH. So what's going on here? Are we starting to get the beginnings of the return of retail? And so retail, we're getting to all-time high, piques their interest. Maybe they start coming back in. They put in all these leverage longs, and Bitcoin is famous for being able to do the 100x leverage longs, and they just get liquidated from the all-time high down. It only has to drop 1% if you're at 100x. If you're at 50x, it's still only 2%, and you're liquidated. So this is what I think is going on here as well. Look down here at the bottom with the open interest, also just fell off a cliff with all of these liquidations. So we're going to go through these things, and when a whale sees $1 billion of liquidity just under the price, like all they have to do is move it 1% lower, they're going to go down there and grab that liquidity before they go up. Now, this also sets us up for going into the election. So I've been on the premium content and even on the Monday newsletter that goes out free for everybody. So make sure you guys are signed up on the email list. I'm talking about the market kind of holding its breath going into the election. Now, Bitcoin traditionally, if you go back and look at the other elections, I think 2016 there was a little bit more of a pullback prior to the election. But I did a little deep dive on that a couple months ago. Is it the halving or is it the election that matters? And the halving matters a lot more. At least it did in the halvings that preceded this one. So I think the 4-year cycle, the built-in 4-year cycle for Bitcoin, the natural one with the halving, still is going to be the dominant force here. But anyway, I went back and looked at the election behavior. It did 2016. It did dip a little bit before the election. The election day itself really didn't do much, and then it just started to rise. 2020, there was even less of any sort of dip prior, kind of moved sideways through the election and then continued higher. So this is not that significant of a dip, really. So let's measure this from the top that was almost the all-time high down to current price is 6%. It's a little bit more than I thought it would do, but this is Bitcoin. It's going to be fairly volatile. We're not looking at a 40% drawdown. Okay, we're looking at right now 6%, and it can easily just go sideways from here right through the election and up. There's not going to be a lot of price action on the weekend because the weekend has been typically very boring for Bitcoin ever since Bitcoin has gotten more and more into the traditional financial space, driven off ETF demand, driven off of futures markets and stuff. The weekend has been quite slow. Then on Sunday evening, when the futures market opens back up, that's when Bitcoin kind of comes back to life. However, next week is going to be interesting because we have the US elections on Tuesday. Monday will probably be pretty dead. The market will be holding its breath. Okay. Tuesday, probably be pretty dead. Might have some results by evening on Tuesday. Maybe it pushes into Wednesday, something like that. But then by Wednesday, I think that's when the markets are going to be exhaling a sigh of relief and move on, continue with what's been going on with them. What is their market fundamentals? So that's what I'm seeing here for Bitcoin going over the next few days. Let me check comments and see if there's anything going on in the chat. I'm a little bit later than normal. Only 75 people watching now. If you guys are watching on Twitter, jump over to YouTube and Rumble. Like, comment, subscribe over there. Appreciate that. Trying to grow the channel. And also make sure you're subscribed at bitcoinandmarkets.com to the email list. I am live streaming on YouTube, Rumble, Twitter, and Telegram. Telegram is the main community. Let me see if those guys have any comments in there. Nothing in there either. Okay, well, let's take a look at a few other charts, and then we will just wrap it up for the week with kind of a shorter show here. I was looking through this one, and I did put it on Telegram earlier. And I'll make it bigger for the guys on Telegram. You can see, so these are all the different cycles from the halving. You can measure this differently. You can measure it from tops. Some people measure it from tops and how long the bear market is to the next all-time high. Some people measure it from the bottoms. That's probably the most common. Or halvings. I think halvings and bottom would be like equally as common to measure this from. But you can see our black line down here is way below the prior path. Okay. Now, if you do measure this off of the bottoms, though, we are right in here. This is a week or so old, so it would probably be about up in this area. We might even be a little bit ahead of the previous cycles when you measure it off of the bottoms. Okay. But I like the halving. So let's take a little closer look. So 2020 is this blue line, comes up here and then goes under. Okay. It's faster than the 2016 line. So this is the big 2016 rally. 20x'd Bitcoin during that rally. This one only was about a 5x total. But it did go faster and then dipped under. So we are more along the lines here of 2016, even below that, So perhaps this means we're going to get a rally like 2016. I've written about this in the past. Are we going to be a mix between 2020 and 2016? And the reason for that is that 2016 was one, it was way earlier, so it had a lot more room to grow. As Bitcoin matures and it gets closer and closer to its ultimate like ceiling price or ultimate adoption level, then the price isn't going to expand. So for example, once Bitcoin gets to $1 million, it's going to be a lot harder to 10x. But when it's at $1,000, it's a lot easier to 10x. So anyway, that affected the 2016 rally. That kind of brought Bitcoin more into the mainstream. And then last cycle, 2020, was kind of stunted because of leverage in you could lend out your Bitcoin and earn return on it. It turned out that those things were not solvent. Other altcoins that were doing stable coins or other tokens, and they were using Bitcoin in their reserves, and then their Ponzi scheme ended up blowing up and they needed to dump their Bitcoin. So those types of leverage plays, unsophisticated leverage, that capped the top for Bitcoin, I think, in the 2020 rally. So is this cycle going to be more like 2016 or more like 2020? Could be in the middle. But right now, according to this chart, we're looking more like 2016. And there was another tweet that came out that I wanted to show here that is talking about 2016 as well. So this is from techdev_52. And he's showing an indicator here. He's shown a couple of these recently. This is a Fisher. And it's showing that when it crosses this zero line, it crossed that in 2012 and then in 2016. And those were the big rallies, the biggest rallies that Bitcoin has seen. It did not do that in this rally. But we are crossing that again after pretty much the deepest turn on this Fisher indicator. He also had a CMF one. Let me go back and see if I can find that. He did one with a CMF. Is this it? No. Maybe it was a different person. Oh, here it is, I think. Yes. This is with the money flow. And you can see as we cross this kind of arbitrary line, but this is a bull market arbitrary line. Every time we cross that, we have massive gains really quickly. It's a 4-week chart. So almost a 1 month. Did not cross it here in 2020. Never got enough momentum to cross through this line, but here we have just crossed through it. So again, these two charts that I just showed you from TechDev, they're showing that this cycle is looking a little bit more like 2016, 2017. And if that is the case, maybe we are in this hyper adoption wave right now. Maybe these ETFs, these options, Trump's stance on Bitcoin being a strategic reserve, maybe this is going to push us into a hyper wave. And right now it's like the last shakeout, the last liquidation, the last $1 billion liquidation before we start going on this big bull wave of this next cycle. So that's all I wanted to point out. And lastly, before I check comments, I'm going to go to this tweet. This is from Ludwig Never Mises. And I guess he is having to do something with the Libertarian Party. Libertarian delegate, okay? And he's published at the Mises Institute. All right, we know and love the Mises Institute. But he had a lunch here, apparently, with Trump. And they were talking immediately about Ross Ulbricht. And course, we saw the headlines that he said he's going to free Ross on day one. So let's just read through how this kind of went, this meeting with the Libertarian Party. So Trump was surprised that it was just one guy. So he said, what do libertarians care about? And this Angela, who must be the head of the Libertarian Party, said it's all about free Ross. That's like the symbol of the Libertarian Party. So he was intrigued and he said, who is this guy? Trump kept pushing as to why this one guy was so popular, which led to a discussion where we illustrated Ross's significance as a martyr for our cause. He's not a martyr. He's just he is a symbol right now. We don't want him to be a martyr. I got to define libertarianism as the beliefs of individual property rights and voluntary society based on peaceful cooperation rather than in free speech or trade. I explained that around the same time people were creating free speech platforms on which any information could be exchanged, Ross, according to the same principles, created a platform on which anything could be traded. Jailing Ross was similar, in our view, to if someone was jailed for creating a non-censoring communication platform. He wasn't a drug kingpin. He was an idealistic kid with the programming skills to create an open platform around the time that technology emerged. His excessive punishment has done nothing to stop the existence of similar platforms on the so-called dark web. Trump was quick to say that he would free Ross, bingo bango, remarking that freeing people was one of his favorite things he did. He immediately began working out how he would mention it and how blah, blah, blah. And that is essentially what he did. Okay, so pretty cool. Pretty cool stuff here coming from Trump. What else does he have? We continue to discuss an array of topics, including freeing Assange, which Assange is free now, capital gains tax on competing currencies, stopping World War III, marijuana reform and medical utility, black market conditions driving the demand for fentanyl, Fauci's corruption and role in the AIDS crisis, regulatory issues in agriculture and medicine, ending the Department of Education, the destruction of opportunity, the need for fundamental change to the administrative state, draining the lifeblood of the country, and the negative directions the country might go if we don't. So all of these things are totally legit now. Like, I remember back supporting Ron Paul 2012, nobody's talking about things like this. This is a libertarian platform right here. And now it's fairly mainstream. I mean, I wouldn't say it is mainstream Republican quite yet on all of this stuff. I mean, it definitely wouldn't be mainstream Republican all grouped together, but individually, I think the MAGA movement definitely aligns with these principles individually. It's just not put together in a platform like the libertarians have put it together. So I think this is a good sign that they're probably going to get a lot of libertarian leaning people, a lot of independent leaning libertarians, whatever the case. And so, yeah, I think this is good. Free Ross. We want to see that happen on day one. And I thought that was really interesting to read through. Okay, let's check comments and see if there are any. It is Friday, getting later. 126 people watching. Guys, drop a comment. If you're watching over on Twitter, you can go over to YouTube or Rumble and drop a comment over there. It comes through the streaming software that I use. Okay. Checking Telegram. Well, that's it. Let's take another gander at some of the charts. Okay, so we looked at Bitcoin. Let's quickly pop in over here on Ethereum. Hit a new low yesterday, but coming back slightly today. Nothing at all significant to report here. Remember, Ethereum does its own fundamentals. They like to tell you it does, but it trades off of Bitcoin. So if Bitcoin has a positive day, Ethereum is going to have a positive day. But overall, you can see this. It's just bleeding out. Okay. All of the energy is bleeding out of this because they stupidly went to proof of stake. Well, there's a lot of problems with it. It's centralized. They went to proof of stake, and they also are deflationary, which is not good. Okay, so maybe this is a good learning opportunity here. So deflation, a lot of Bitcoiners will say deflation is good, but what they're talking about is price deflation, which is not actual deflation. Okay, money printing is inflation, and money destruction is deflation. So, for example, losing Bitcoins, sending Bitcoins to burn address, that is deflation. All right, not prices gently falling. Deflation is actually lowering the money supply. And so Ethereum got tricked because Bitcoiners, I mean, if Bitcoin was easy to hard fork and easy to change, people might have done this to Bitcoin as well. Like, hey, kind of how they say, oh, the block size is too big still, or right now, actually, we need to decrease the block size for Bitcoin. They're always arguing about that. Well, they would probably be arguing about, hey, we need to decrease the 21 million slowly, you know, burn a little bit every epoch. I don't know, something like that. They actually could do that on Ethereum because it's so centralized and so easy to change and easy to hard fork that they said, hey, let's be actually deflationary and start taking Ethereum out of the supply. Well, that was really, really dumb because deflation is bad for growth of your economy. They were birthed off of inflation. They grew and evolved those first few years off of very high inflation. And they were able to build marketing and Ponzi scheme, even their roadmap and the way they designed their network was incentivized by this inflation. Okay, now they cut that inflation. Their system is all mangled and starving the ecosystem on top that was thriving off that inflation is starving the ecosystem on top. And so that's all that can happen is Ethereum just continually bleeds out and it will never really, it might have another pump, but it's a dead coin as far as I'm concerned. Okay, how about gold? Gold also had a couple down days here over the last couple days. I am bullish on gold, but of course about 1/10 as bullish on gold as I am on Bitcoin. There's no way gold is going to $50,000 an ounce, at least in the foreseeable future. But Bitcoin could easily, 10x from here. So I'm glad that gold bugs are getting a little bit of love. DXY, big day today, up. I remember talking back here, I was like, man, this is a little lower than I want it to be. If you guys go back and watch my live streams from the end of September, I say pretty much that exact same thing. Like, man, I might have to reevaluate. If this breaks 100 and it's going to 99, 98, I'm going to say, whoa, maybe I'm wrong about the dollar. But then it bounced off of a nice bullish divergence and has been crushing it up to 104. The reason for that is because in a credit-based system, you're going to be hit with a monetary shortage. So if you think of supply and demand, okay, a supply and demand curves, they're crossing like a chart. And the supply of money is elastic if it's sloped. If it's straight up and down, then it's inelastic. Bitcoin is straight up and down, 21 million. But credit-based money is elastic. And so in good times, that's good because there's a higher demand for, or there is profitable ways to employ more money because you're growing. And so the money can be expanded, and that's going to be good for the economy. It's going to actually help the economy grow. Whether that's morally or ethically good or the best way to do it, I'm just explaining how that works. So credit elastic money is good on the way up. But when you go on the way down, what happens? You slide down the other side of that elastic supply curve, and you have demand outpacing supply. So credit-based money always will end in a supply shortage. So what happens in for the dollar if it's in a supply shortage? The price is going to go up. So a deflationary system, a credit-based system, is going to prefer the dollar to rise versus other currencies. A lot of people in Bitcoin don't understand that. But anyways, let's go to the 10-year. This has been getting a lot of attention, and wow, did it have a big day today. Holy cow. Holy cow, that was a big day. Feels a little bit like a blow off top before an election, though. I don't think this is going to be moving much on Monday. Maybe down, like the yield will be moving down a little bit on Monday. But overall, this is quite overdone. Let's see, where is it on RSI? Yeah, I mean, it's in overbought territory. It's continuing to go higher. Now, I wrote about this today. I have not had a chance to publish it yet, but let me go to my post that I'm still in the middle of completing. And this is the one I wanted to look at. Make this bigger. Okay, so you see this is a 3-month here, and it's coming down. And this is the 10-year, and it's going up. And then you have the Fed funds policy range. We do have the Fed funds meeting next week, so I'll be covering that hopefully live at the time. But you can see as the 10-year has been ripping higher, what's been happening to the 3-month? It's been coming down. A lot of people say, oh, this is an anticipation of the cut. But, okay, it happened before the cut. If this was mechanical, if this was set mechanically right here in this section, how is this possible to anticipate if it's mechanical? That's because it's not mechanical. It is all psychological operations. And so the 3-month is coming down while the 10-month is going up. Now, what does this can tell you a few things. So if the reason why the 10-year would be going up, okay, is this is what people think, that growth and inflation expectations are rising. Okay. Growth and inflation expectations are rising. Or actually, they don't think of it with the expectations part. They think of it just growth and inflation are rising. So growth and inflation are rising. So the 10-year is going up. But really, it's just expectations. Okay. The 3-month actually exposes that. And because if we were really seeing growth in inflation that we're about to accelerate, the 3-month would also be going up. The 6-month would be going up. The 1-year would be going up. And let's take a look at those. So switch back to this, and we have to go into here. So here's the 3-month. And you can see it's just diving right now. We go the 6-month. It also is coming down right now. Why did I put this in here? Just forget these drawings for a second. So it did go up a little bit, tried to go up, but pretty much sideways. And now the last few days has been going down. That doesn't match the 10-year. How about the 1-year? It did have this little pop here, but really it's been sideways. It is not even following the 10-year either. But this would not be the case if we actually had inflation and growth picking up. If we had inflation and growth picking up, these things would be following the 10-year higher. The 2-year, okay, now we get to the 2-year, and it's starting to follow a little bit with the 10-year, but not nearly to the degree, okay? Not nearly to the degree. If we go to the back to the 10-year, see how much higher this is compared to this structure over here on the left side. If we go back to the 2-year, it's down below that structure that's on the left side. So the 2-year is kind of following it, but kind of not. But if we go under the 2-year, none of these are following what's going on with the 10-year. That tells us that the 10-year is not telling us what's going on with inflation. It's telling us what people think could happen to inflation. And why would that be? Because of all these things that have happened over the last month. We have the Fed cutting. We have China stimulus. We had a good payroll. Today was a bad payroll number, but last month we had a good payroll number. Then we have Trump taking the lead. Now we have Trump early voting, looking really good. And so that is optimistic. So the market is optimistic right now, and that is why the 10-year is doing this type of action. Okay. As soon as Tuesday rolls around, That's probably when the high for this is going to be put in. Maybe before that, but it's going to be around election day that the high on the 10-year yield is going to be put in. I will go on the line right now, on the record, and say that is 100% what I expect. That this will put in a top somewhere, give or take, 24 hours or so of the election of Tuesday. Okay, let's take a look at the comments here. BTCP, what's up? Happy Friday back at you. Big week this week with Halloween. And I had a cold all week, still trying to get over that cold, but hopefully the weekend will be better. Is the yield curve telling us the market expects poor economy in 2025, but starting about 2 years out, things getting better? It's hard to put a time frame on those types of things. I think that, you can look at differentials, okay, and say, okay, what's the difference between the 2-year and the 10-year? Then that means the market is expecting something past 2 years to happen, or the economy to be better past 2-year mark. But that's not really what it's doing. It is expectations today about relative expectations. I don't know how to exactly put that. But no, it doesn't really have anything to do with the actual timing. It's just kind of a rough relative expectation. So now today we kind of expect the economy in the near term to deteriorate, but it will get better eventually sometime. Okay. I don't know. That's not a very good explanation, but it doesn't have to do with exact years, like 5 years from now and 10 years from now, And it's also the directionality and where they are relative. Because, okay, so let's say the 10-year was way above the 2-year, and we were not, well, it is above. The 10-year was way above the 3-month, which it's still inverted right now, okay? But let's say the 10-year was way above and it was rising. Okay, that would be different too. But we're in inversion and we're in a bull steepener. So that means that the short term is falling faster or falling relative to the long term. That is extremely bearish. Even though it's called a bull steepener, that is extremely bearish. That's what you see in the financial crises, actually. Like when things are breaking and freezing up, you see bull steepeners happen where the short-term yield is crashing and the long-term yield is relatively flat. So let's go back. I have all these drawings on here, but okay. And we can bring in the 3-month. Okay, and we'll do same. Okay, it's going to be in pink. But if we go back here, this is this period right here, going into 2020 and COVID, is very interesting. I was looking at this today. So here we get the inversion coming in here. The 3-month in white is dipping down below that's the 10-year in white. The 10-year in white is dipping down below the 3-month, inverting. Gets pretty significant here. And actually, I need to bring up this one as well. Let's do lower. And I'll make this red because that matches my other times I've used this. Okay, so this is the Fed funds policy range, the lower end of it. And you can see we're inverted. There we go. Jeez, I thought that looked weird. Inversion, but then we uninvert right here. Interesting. In October of 2019, we uninvert. The 10-year goes back above the 3-month here. And what does the Fed do? The Fed stops with their cuts. They stopped their cuts here. This was their last cut in October, and they don't cut again until March. So 6 months. because the yield curve uninverted. All right. Then what happened here? Then the 10-year, boom, starts dropping in January. COVID's coming. We see it. We see it. Something's happening. Boom, the 10-year drops. But then it levels out. It kind of levels out right here. About, between 0.5 and 1%. 50 and 100 basis points. This is what I'm saying. And then the 3-month, though, dives even faster. See that? And comes down below. So this is a bull steepener. This is where the bull steepener happened, right here, where the 3-month fell faster than the 10-year. And we didn't have that over here anywhere. It just happened right when the crisis hit. Okay, so if that's what we're seeing right now, that's not good. That's not good at all. So, all right. It's my little exploration of that. Let me check Telegram, see if there's any other comments. No, not seeing anything. All right, guys. Well, BTCP, thanks for hanging out. If you guys are over on Twitter watching, 159 of you, go over to the YouTube or Rumble. The links to those are in my pinned tweet. And like, comment, subscribe over there. I try to answer all the comments, point out if I'm wrong, point out if I'm right, point out if you want me to see anything, if you want me to react to any other podcasts, any other videos out there on YouTube. And it could be macro or Bitcoin. I don't care. I will go for all of it. But yeah, thanks for joining me, guys. Have a great weekend. Go out there and spend time with loved ones, friends, and family. That's what's important in life. Bitcoin can get very emotional, especially the elections can get very emotional. But remember to make time for those mental health, spending time with friends and family, doing things you love, doing a nice hobby outside, something like that, just to clear your mind, because these are very stressful times in the United States, and everything will be fine. Bitcoin is here to stay. It's going higher. The bull market is not over. Bitcoin is going to go higher again, whether that's this weekend, whether that's Monday, or whether that's the next Monday following that. But all signs are still pointing higher for Bitcoin. And yeah, so thanks for hanging out, guys. I will see you on the next one. Bye.